Right, okay. Firstly, can you see the visuals correctly, Stephen? Good to see you, Stephen. Glad you're in the room this morning. And yeah, I'm just chattering away here. Is that reasonably okay? Jose G, yeah, that seems good. Yeah, indeed. Hi, George. That's marvellous. Fine. Good to see you all here anyway. Patrick, Stephen, people I know, Adinda, Jose, George, Cat Pips, Craig P, Craig G, and a good many more. Right, well, good morning all. Good morning all. I'm going to just do a session this morning, which is going to be based on, well, it's back to basics, guys. It's back to basics. Now, we all tend to get a little bit carried away with the latest, greatest sort of indicator system or whatever. But what goes on in the markets is that they go up and down and they go sideways. So that's really the basics of it. Just three things: up, down, sideways. And what can so often happen is that we completely lose track of, are we in a trend or are we not in a trend, and are we going sideways? And it's a question that, well, I have to ask myself every now and again. And if I can't actually answer that question, then that's the time where I think, well, maybe on this particular day, on this particular market, I really ought to be looking elsewhere, because if I can't answer that question, then I really shouldn't be putting money on the line. It's as simple as that. So what we're going to look at is some of the major trends that there are at the moment. We've certainly got plenty of those. And what then constitutes a change in the trend to a sideways move, and then ultimately to a new trend. And we're going to look at some of the main markets. But let's just get started, first of all, on looking at the basics then of a trend. We're looking now at a whole series of charts. We've got the euro up there on the top left, dollar index bottom left. You've got a chart of oil on the bottom right. And all of these are, well, all of these charts, we can see that we've got trends. There have been some sideways moves. And most of them are very, very clearly defined, either up or down. And that's been the nature of the markets just recently. So I'm going to pick a chart, and the chart that I'm going to look at to start with is going to be gold. Now, this is a weekly chart of gold, and it's been running, as we can see, over a number of years, okay, going back to 2010. So we've got plenty of material to look at, and over here on the left, we've got a very, very clear trend. Now, we're just going to do this without any additional indicators at all. There are a couple of, well, there's one in particular that some people swear by. It's called the ADX. And to be quite honest, I find it useless. I much prefer just to look at a chart, and if I can define what we can see over here on the left, then I know that we're in an uptrend. And the definition goes like this. It's so simple. It's so simple. And it's one of these things that I've actually got this written on a post-it note right in front of me as we speak. And it's been there for years. Because sometimes I get confused. We all get confused from time to time. So we just want to get this definition absolutely right. An uptrend is a succession of higher highs. So we've got a high here. Okay, we can say that we've got a high just there, and we can call that a high. We got another one just over here, and we can call that a high. And we got another one over here, and we can call that a high. Okay. And then down here, you got it? HLs. We've got HLs. Higher lows. We've got higher lows. And that, for me, is just defining this thing. It's dead simple. It's dead simple. And provided that we can look at a movement and we can quite simply put labels on it. We've got a high, higher low, got a new high above the previous high, higher high. We could call that an HH in actual fact, and then we've got a higher low. Now, this is how a trend actually works. Then, eventually, the whole thing goes into reverse, as happens right the way over here, and what we end up getting is right down here, for instance, we can say that what we've got there is a lower high, and right down there we've got a lower high. Okay. A lower low, I should be saying, my apologies, a lower low over here. Then we've got a lower low. So that doesn't quite want to play ball just at the moment. And this is where I should be putting in the lower high. So that was just going to go in there. And over here, we've got just about a lower low. And we've most certainly got a lower high just here. And right the way at the bottom right-hand corner, we're not quite sure yet if this is a new low or not. In fact, it's looking rather as if it's a triple bottom. So what then is happening when we've got this transition from new highs and higher lows to lower lows and lower highs? Well, what we've actually got is a reversal. And what will very often happen is that the last gasp in an uptrend will be a pretty dramatic move. And when we're in it, everyone gets carried away. Everybody. They get excited, they see it moving on up, and those who've got positions will think that they're going to be on easy street for the rest of their lives. And consequently, what we find is that these highs, people just buy in. You know, the uninitiated, those who've maybe not taken big losses yet, will actually wade in and they'll go long at these highs, only to find that it collapses on down. Then almost certainly there's going to be a rally back up, and of course the bulls get involved yet again, only to see that it then breaks down and price moves down to very often a new low, and so on. So what we've actually got is a whole series of peaks and trough, peak, trough, peak, trough, peak, and then we get the big trough, and it collapses on down. Now this is just mapping out a multi-point reversal. A standard 1, 2, 3 starts the thing off, and then we get, that's the first lower high, first lower low, lower high. We don't actually get a lower low at this point. We get a double bottom, and price moves up. So the ideal place to go and take our shorts is going to be at any of these odd numbers, 3, 5, or 7. That's where we want to be taking our shorts. They're the optimum short areas. And what we can see is that whilst this is actually forming, this is essentially just moving sideways. We could put a couple of lines across and define it, and we could have a range play out of this one quite neatly. So that if price goes either above one of these lines, or indeed below one of these lines, what we can then do, we can be looking for a bounce which just might take it back to the same place again. So when we've got this situation, we've got to be able to define it. And it's different to a trend. It's different to a trend. Now, if we take that number 1, okay, which has clearly gone above our white line, but of course we can't draw it in yet, we've got to wait until we've got a reversal, having dropped down to this 2 level. Okay? We know it's a reversal because price has subsequently moved on up, and it's moved through a series of zigzags. And that series of zigzags has then gone up to this 3 level and price has come down. And once it comes down, having formed within it a little mini 1, 2, 3 itself, that's when we can actually put the very, very first white line through, and we've got the lower white line. So we've now got defined an area where this just might want to do some bouncing. Bearing in mind that the amount of time that is spent in trends is considerably less than the amount of time spent in trading ranges. So because of that simple fact, then it can often be very, very worthwhile to get these ranges defined and trade them accordingly. So it then becomes a simple job of going long after price has either touched or gone through the lower white line. But the important thing is it has to now be moving back on up. So we go long and then we reverse it when it gets to the top, and we then go short, waiting for it to go through the line and then back through again. So that's just the way of managing to make money in a sideways move. And we can add on to this a neat little bit of money management so that when our position goes in profit and it's around about halfway, we are going to take half profits, protect the position, make sure the remaining part of the position has got to stop at break even, and then we just sort of run it up for all it's worth. And then we run exactly the same money management on the way back down again. Now this is on a weekly chart, but we will see exactly the same thing because of the fractal nature of price charts. We will see exactly the same thing on any time frame that you might want to look at. So once you've got that under your belt, then we've got a very neat little trading system to work our way up and down within a trading range. Now, what about optimum areas to get in and get out on a trend? Now, that's often a difficult one because where we get a runaway trend, we tend to get the same emotions that there were at the end of this up move. And, you know, the emotions sort of take over because we all want to make money. We've all got that greed gene, and on some of us it just takes over. It just takes over. And so what will very often happen is that we'll get a move that starts down here at the bottom left. It'll go up to a high, and we'll see a correction, and we won't be convinced that we really ought to be trading. We wait until it goes through that previous high, and we wait and we wait and we wait, and we think, oh yeah, well it's definitely going up now. It's definitely going up, and then at around about say this position, we go long, and we see it going, you know, in our favour, but then price comes back down. Oh dear, you know, we've got a bit of a panic there, and then it goes on up again. We get a bit of a panic. We think, oh no, we've now got a high low above our entry level. It's going to go to the moon. It doesn't. It comes back, and lo and behold, this time it comes back a little bit further and takes our stop out. So entering in this sort of area is very definitely not the optimum area to do it. We've got to train ourselves. We've got to train ourselves to be able to take our entries, okay, at the time, okay, that the early correction in this uptrend from the high comes down to the higher low, and then it moves on up. And there's a dead simple way of doing that. Use a trend line. Use a trend line. Now, invariably, what we will see is that there will be, along the way, a little zigzag. Now, if I just show that in a little bit more detail, what that move actually looks like is this. We've got a down move, we've got a little up move, not much of one, but there's a little bit of an up move, Then there's another down move. And I love these because what it gives us is a superb entry area. It gives us an entry area just down here, okay? And that entry area okay. Sorry about the spelling, I never was great shakes at school at all. We've got this little move, which is a zig-zag zig. So that's that move just down there. It goes down, it goes up, and it goes down. And then price will start to move up from here. And as soon as price moves up from here, from that level, and we can see it moving up, and price action is telling us that it's moving up because it breaks the little yellow line, and as we're looking at the candles, it moves above the preceding one. That's when we want to get in. So we want to get in early. We don't want to get in up there. We want to get in right the way down there. And that means that we can run these runs. Well, we never know it's going to break into a run like that. But when it does, it means that we've got a lot of protection. We've got a big margin of profit, and we've only got a tiny margin of error. So if we're going to be wrong, you know, I don't want to be risking a lot. I'd much rather have a small margin of error rather than a great big margin of error. So there are two things we've got to train ourselves to do. Never, ever get into a position with a move that is well underway, but always wait for the pullback. There will always be a pullback, and if we can further train ourselves to only take an entry after we've had one of these zig-zag zig moves. Now, Elliott Wave people will tell us that this is not a zigzag zig, but it is an A, B, C move. So those A, B, C moves are great. And very often we actually find that the length of these legs, of these sort of down legs in this case, are about the same, and they call that then a measured move. So if we were just to be as disciplined as that, so that we only ever will take along after we've got this little up move which is moving up, we then get this A, B, C, zigzag zig move, and price then is proving itself by moving on back up in the direction of the original trend. We've got a trading system. And it's got to be the simplest trading system that there is out there. And it costs nothing. The only thing it does cost is emotional discipline. And that will stop us getting in at highs and putting ourselves at risk in the markets. Right, okay, folks, well, that's it. That's really all I've got to share with you today. I mean, I guess you're going to be thinking, well, I knew all that anyway. Well, you do. I do. But isn't it amazing how often we get ourselves completely muddled and we feel that we've just got the emotions take over, and we disregard all of that and we find ourselves buying at highs only to find ourselves getting stopped out and losing money. But I'm sure that has never, ever happened to anyone listening to this right now. Right, okay, let's move on. Let's move on. Let's move away from gold for a moment. And what I want to just take a little glance at is to take a little glance at the dollar index. We're looking at a longer term chart. We're looking at a weekly chart of the dollar index. In fact, bear with me a second. I think what we're going to do, we're going to take a look at this chart of the dollar index, and we're going to go to this monthly chart. Yeah, that's what we're going to do. Now, this is a long-term chart. it's running right the way back, as you can see. Well, let's run it back even further. Let's run it back even further. There we go. We can take that right the way back to 95. Now, this is a trend which is moving on up and it's moving on down. I've also got with me, I can't show it to you guys, I'm afraid I really should have maybe scanned it a little bit earlier on, but I've got to chart the dollar index going right the way back to 1973. So that's another 20 years behind this one. And lo and behold, do you know what it's doing? It's going up and down. It's got big ups and it's got big downs. And in that time, do you know what the lowest it's ever been? The lowest this dollar index has been, looking back, has been this 80 level. It's been that 80 level. That's the lowest it's been. And, well, the highest that it's been is considerably higher than the high that we've seen here. It's been up to 160. In fact, it popped up to just about 170, just about 170. So this thing moves, and it moves in great big trends. And these great big trends, do you know how long they last? Well, they tend to go up for about 6 to 6.5 years. And do you know about sort of coming down? They tend to come down for a little bit longer. In fact, the main part of the move tends to happen sort of fairly quickly. But if you add on then the little draggy bits that sort of last this one out, because we can see that this peaked right the way over here, and it peaked getting midway into 2001, and this one then ran right the way down, and it ran down for about 4 years. But we can then add on another 4 or 5 years for these other messy bits, which just allowed it to run on down. So on with that bit of information, and sort of going back, and based on the fact that the uptrends will last for about sort of getting on for 7 years, 6.5, 7 years, then we can start to just look at what is going on now. Well, we've had, since the great crash of late 2007-8, we've had the dollar going nowhere, absolutely nowhere. We've had a lot of commentators saying that the dollar is going to collapse into oblivion. A lot of commentators telling us that over the years. And what we actually found is that it hasn't actually crashed into oblivion, but it's starting to recover. Now, if we were to look at this little trading range, using a couple of white lines, the trading range that we've been in now since mid-2011, and that was where the cacophony of dollar collapses were, there were a lot of them out there telling us that it was completely over and all totally doomed. That actually turned out to be an excellent year to be buying the dollar, because since then it's moved into this trading range, and there were plenty of opportunities to play this range up and down, but it's now broken out. So is that a big solid breakout that we've got there, or is it not? Are we just going to see this popping back into this trading range and moving on down? Well, I'm going to put it to you that we're at the start of a 6 or 7 year dollar run. How about that? And this all started mid-2011. So let's just add on, let's give it, say, 6.5 years from 2011 we could be just at the start of a nice big bull run. We could be. So let's now go and look at this on that other chart that we were looking at, and look at the dollar index weekly chart. We'll have a little bit more space in here for the moment. And if we count the number of up weeks, we've got about a dozen of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Can't quite call it 13, 12. We've had 12 up weeks, 12 dramatic up weeks. So we've had a real big up run. And the eagle-eyed of you will have seen that there's also an important harmonic level that price has actually got up to. It's got up to one of these back levels. Now, as I think most of you know, I use various tools, and one of them is Fibonacci, and the Fibonacci tool will show me some of these critical levels. So what this is now telling me is that we are due for at the very, very least, we're going to get a sideways move. And indeed, what we might well do, because what happens after a strong uptrend is that we will tend to get one of those zig-zag zig moves. And that's exactly what I'm looking for right now. I'm looking for the price then to put in one of these little moves where it will correct on down a bit. It will then rally up a bit when we think we're going to be back into the trend, and then it will come down a little bit further. I'm looking now for one of these moves, which may or may not happen, but I wouldn't want to get into taking this dollar long until after that A, B, C zigzag zig has actually taken place. So we've probably got a sort of few weeks for that to actually happen. If it then completes one of these patterns and then moves on up, then that theory of us embarking on a big, big dollar run that has still got a couple of years to run at least, that will then be uppermost in my mind, and I shall be wanting to trade the dollar in that direction on the upside. So there we are. That's my opinion there on the dollar and what is going on with it, based on cycles and based on the fact that we've had this major run over now what has proved to be around about 12 or so weeks. Right, okay guys, that's looked at those. Now let's bring this right the way down to the shorter term. Let's bring it right the way down to the shorter term. Whole series of charts here, and we've seen the British pound, which was flavour of the month. It absolutely moved up. Note this just coming out of these harmonic levels, and then it decided to collapse on down. So let's look at a shorter term chart of that. Okay, just bear with me while we switch over. Bring that down to the daily. Okay. And what has actually happened so far is that the big downtrend took a bounce on up. All of this downtrend was on the run up to the Scottish referendum, and that caused the market a fair bit of turmoil when it looked highly likely that Great Britain was no longer going to be Great Britain. What actually happened then was that the referendum vote came through, and there was this big exhaustion spike on the upside, which immediately moved into a very bearish day. And of course, we've seen price just move down, down, down since then. So we've most assuredly got ourselves a downtrend. It is still well and truly in a downtrend. And at the moment, we've just got something of a rally, which is trying to push its way up from 160 level. Now, if we bring this much, much further down to a 30-minute chart, this is a time frame that I find really quite useful. I find it useful in that what we can do with a 30-minute chart is that we can find areas of interest, and we've got areas of interest here. If we look at this little series of lows following this dramatic downtrend, very, very clear downtrend, where we've got a succession then of lower highs, which then broke into lower lows, lower high, lower low, dramatic move down. That was last Friday. That was when we had sort of non-farm payrolls, etc. But then, what do we find? That on Monday, we get this really quite useful little reversal. Now, it's a sideways move, but the interesting thing about this is that we've got a higher low, and we've got another higher low. So, putting some numbers on it, we've got a 1, a 2, a 3, a 4, a 5, a 6, and a 7. It's a multi-point reversal. And that multi-point reversal followed through beautifully. Now, this multi-point reversal is something that the breakfast trader process goes into in detail on exactly how to identify what is going on. And we actually had a very, very useful run yesterday. And as you can see, it moved up. We've also got, just slightly hidden from view here, we've got harmonic levels that were picked up. So a combination of what we can use with breakfast trader principles, harmonic wave trading principles, and volume, which is actually shown here with the colored candles, will give us quite an edge on what we're looking at. But essentially, it just comes down to recognizing a trend and a trend reversal, and then on up it ran. So on a 30-minute chart, one of the real benefits of it is that if we can get it right, we can see this running on up. We're going to get quite a good run out of it. And without a doubt, this was quite a good run. We had a run yesterday, which gave, in total, around about 80 odd pips. And for intraday trading, then, yeah, that's quite a reasonable little run to have. Now, we've got one or two little twists and turns along the way, and we've got one or two other little indicators that we actually put in that really do tip the balance well and truly in our favour. And currently, traders class members are making full use of those. The way in which they do it, well, I show them exactly how to do it. And we do this on videos that come out several times a week. So we then got, overnight, we get this little bit of a tumble, and lo and behold, in the early hours, it decided to move on up. Now, by the time we get to our desks, we have got this little pause coming through. And I'm going to run right the way down now to a 5-minute chart. And we can actually see that in a little bit more detail. This was one of those trends. Higher low, having broken the previous downtrend, it moves into sideways mode. Then, once the last lower high in that previous downtrend, once price has gone above that, we know that we're now in the potential for a run on the upside. We wait for these little corrections. Look at that, one of those A, B, C, little mini zigzag. We can just put a line across, a dead simple line, so we know that it's going up at that point. It moves on up. Now, I'm not at my desk right the way through the night watching that, but what I do watch is what is going on here. And we get another one of these little mini ABC type corrections. And by putting a line across, when I spot that little correction, used in conjunction with just one or two other very simple things, as price moves up, that is the entry right there. Absolutely right there, where we've got that white line. And then, on up it goes. Now, if we look at this entire move, going from just after 3:30 a.m. UK time, if I take the line to that point, and then we've got this little corrective move that run on down, and then we take another line running up to the high, then this gives us a zig, zag, zig move. It's an A, B, C move, and the vertical distance of the C move is just about the same as the vertical distance as the A move. In time, it was done in a lot less time. But there we are, we've got one of those A, B, C moves. And lo and behold, it pushed through the round number at 161. Many people think that as soon as it pushes through a round number, it'll just keep on going. But for some reason, it just stopped. Well, I can show you a couple of the reasons why it actually stopped there. It stopped there because we had a whole series of harmonic levels that came in at that point that we can see on this 15-minute chart. And that told us that this move had really gone as far as it wants to go. We then get a very clear multi-point reversal. And the multi-point reversal showed us that we've got, at that point, we got a 1, and then just down here, we get a 2, then we get a 3. It then broke lower, and when it broke lower than number 2, we knew that it was going to run on down, and so it then decided to pop back up again, and we can put a number 4 in there, and then finally a number 5, where it popped up to the colour trend and decided to move on down again. One of these magic lines again. We just put the magic line across. When we've got the evidence it's not going to go higher, and we've got the evidence there with the volume candles and the little doji in the middle, colour trend hit, price then moves down as it breaks the line. It's a little bit tighter actually. Then we take the short and we get another few pips on the downside. So combination of just looking at very straightforward trend following processes, getting in at the optimum place, and having just one or two little tricks up our sleeves, such as an ABC move, to give us an idea where we might want to get in and where we might want to get out, is really all we need to put together a system. Right, long-term, yeah, sorry, I wasn't looking at that moment. Long-term outlet for the pound, do you think it's reversing? Because on the weekly chart, it's just bounced off the 200 period SMA. Oh, right, well, that's an interesting one. Let's go and take a look at it. Let's just, bear with me a second, it'll just take a minute for this to run through. Well, even less than a minute. Well, what was really quite, I shouldn't chuckle because the process on cable, we've sort of had this reversal area. We had price move up. As you can see, I've got these sort of measured moves put in, etc. And one of the real keys to this was that when price was getting up around this 66 to, 170 region, then again we had this whole raft of people who were how can I describe them? The gurus. The gurus were coming out of the woodwork telling us that it would be going on up forever. Every now and again, I fall into that trap, and people ask me, where is a market going? And in fact, I had several phone calls from brokers last Friday morning. I get this every non-farm payroll day. I get calls from brokers saying, which way is it going? Which way is it going? Which way is the market going to go? Because the brokers make more. It's their big money day. Spread betting companies, it's their big profit day. Non-farm payrolls, because so many people get it wrong. And what they want to know which way it's going to go, and they can then sort of do quite nicely out of people who go the opposite way. However, and my response is always the same: haven't a clue where it's going to go. But what I will do is that I'll very often take a position, and I'll take a position never ever before, and never ever try to anticipate which way the market is going to read the numbers. So I'll wait until afterwards, and I'll trade the reaction, but never ever before. So if we just sort of suggest on this, I actually haven't got a 200 period SMA on. I suppose I could, but the real key for me was this week. You see this week where we've got a candle there. Let's just put a bit more detail on it. We've got a candle there which went higher and then it went lower than the previous week. And that previous week couldn't make its mind up whether it was going to follow up any higher or lower. So we've got a nice little beautiful Hallmey reversal combo, and that was telling us that cable was in trouble up there above 170. And then, of course, we've seen it move on down. And, this has gone into a reversal. And the statement that you actually put there, Mo, is absolutely right. It has gone into a reversal. Now, that's not to say that it's not at this level just going to move sideways now and then put in a bounce. The further it comes down, the greater the likelihood of that actually happening is. Right, sorry, you've got one or two sub-comments here. Yeah, absolutely. I'm a firm believer in looking closely at price action and looking to see what the likes of the candles are actually telling me. So for instance, let's just look at this little move. Let's just look at this little move. This was the Friday that the referendum then was announced. It turned out to be a very bearish day. Following that, we get an Hallmey. Now, we get a Hallmey break, and price moved higher. And that very often can result in a strong up move. So, following day, it did not follow through. Okay? And that simple fact suggests then that it's in trouble. And this very next day that did not follow through, which should have followed through on the upside, was also an Hallmey. Market not quite sure where it was going to go. We then get a downside break. And the key to this was that the previous Hallmey, when price went below the low of that Hallmey, which should have been, it was initially a bullish breakout, but had no follow through. As soon as price went below that, then the writing was well and truly on the wall that it was all over for the pound, and that we were just going to get a resumption of the down move. Right, Okay, folks. Well, yeah, we most certainly should just sort of wrap it up at this point, I guess. So many thanks for being with me this morning. Sorry to have just cracked on a little bit longer than I should. And if you want some more information on Traders Class and the sorts of things that we do, don't hesitate to get in touch with me through tradersclass.net, and be only too pleased to keep in contact with you. Hope to see you next month. Bye for now.